Hello, everybody. Welcome back to the Greyhound investment page. Hi,
What's up,
Arwin. How are you?
guys? Good, thank you. Good, thank you, man. How are you, Dalvin?
Good, good. Nothing much. Just recording time. Had some ideas.
Yeah.
Pikachu and I were having a discussion about being an intelligent investor. So we decided to quickly share this about this to everyone. So yeah, Arwin, tell us what do we have for today?
So basically, I think, like you said, we just wanted to go down and break down what constitutes a smart investor and what are
Mm-hmm.
the good financial habits a successful investor has. Lah. Basically, I always
Mm.
tell people, hey, investing is a discipline. There are certain rules to follow. And now, if you don't follow those disciplines and you don't follow those rules, you're going to be disappointed.
Yep.
Okay, so today what we're going to do is we're going
Mm-hmm.
to actually run through maybe first the financial habits of an individual. I think Dalvin can
Mm.
take that part. What's a
Yep.
good financial habit?
Can.
And then the second part I can run through is what constitutes a good investor. What are the disciplines that we need to be successful, lah, basically.
And basically, as an investor, what you need to do lah
Yeah.
with your investments, how do you, in a
Right,
way,
that's the only thing,
manage it lah?
if you don't have like a set rule, if you don't have discipline, then you're just gambling. We are not here to gamble. We
Correct,
don't here to
correct.
speculate. We want to have proper clients as well. For us also, good clients means less headache.
Mm,
Yeah.
correct. Mm. All right.
Yeah.
So,
So why don't you
yeah,
tell us what
yeah,
constitutes good habits
correct. Let me get
of
the
a
ball rolling.
successful
So,
investor?
all right. So, again, just a quick disclaimer before we start, as usual. So, this is not any financial planning advice or investment planning advice. Whatever we are saying here is just to share. These are tips that you can take, but there are some things that you have to do at your own risk, lah. So, don't until you come back and say, "Hey, Dalwin and Arvin told me." So, like, we,
You can use what we
and
say as a guide. You can
yes,
use what we say as
definitely.
a guide. I
Right.
What we tell is normally what we practice anyway,
Mm,
and I think we're not super rich, but we are comfortable lah. I think we've invested
correct.
okay. Yeah,
Yep. I think it's also very important for us to get this out as disclaimer all the time because
yeah, yeah.
nowadays
We are out there
security
live.
information,
Anyone can listen. Correct.
people still like like very easily they're like, oh, they're giving
Free
unlicensed
financial.
advice and all, these kind of things where they say. So of course we are doing our due diligence and getting on the disclaimer lah.
Can.
Nothing
Good.
bad. Yep. All right. So this would be what are the things that make up a good financial habits lah, a set of good financial habits. So not just investment yet, it's just how do you prepare yourself to be a good investor. So you need to start with having good financials. So whether you have a financial planner in your family, or your parents hired someone, or you hired someone, regardless, there's always some basic steps that you can take to be very good financially. Number one, the most important thing is budgeting. So that's like the basic rule. If you don't
Yeah,
budget, you're gonna spend unnecessarily, and you're not gonna keep track of what is where the money is going. Just very simple, For example, if you have a spreadsheet, you can just put in like okay, one whole row is for income, one whole row is for expenses. So where the money comes in, where the money goes out. At the end of the
yeah,
month, right? You can see where are you spending, and where you can cut down. That's where this kind of tracking really comes into great importance. So it's a
yeah,
hassle at first, definitely. I wouldn't lie, it's definitely a hassle. But once you get into the habit, right? Like people always say, like olden days people lah, they say it takes
the
about
kelima-lima lah.
30 buku lima. Sorry, but what is people say? It means like it takes about 30 to 40 days to form a good habit, but it's only about 3 hours to form a bad habit. So you know, bad habit, that means if I just decide to not do work for 3 hours, it might become a bad habit. But if I decide to, start budgeting, it's a difficult thing. It's a good and difficult thing. But once you get into the rhythm, it will just start being a routine for you. And then, every single thing you buy, okay, buku lima, like you said. So buku lima is our default
Correct.
application that we used to use. Nowadays, we all have phones and all. So I do use a very simple application. Let me quickly show up here. It's called Money Manager. So you can find
Ah,
this app in the, yeah, you can see it. So it's something like this. Yeah, I can't. Yeah. So you can see this is the one, Money Manager. I don't really see if it's being zoomed or not. The one in the middle.
yeah, I
So
can
it's
see
like it's like a piggy bank. So this is a app that I use to, basically keep track of my money that is coming
your
in and going
expenses lah.
out. Correct. So my salary, my commissions, and then for example, if I get like bonuses or just give money from some people sometimes,
Yeah, yeah, yeah.
all goes into the income.
You're
And then
still
for the
young lah, so you
expenses,
dapat, you still get your gift money lah. I don't. I
correct.
have to
Yep.
give money.
Yep. Whereas for the expenses, basically everything that goes out of my pocket. So makan minum, investments also I calculate under my expenses because those are outgoing, right? But those are outgoing to a good channel some way, right? So I just want to see how much is coming in, how much is going in.
Going out,
And
yeah.
end goal of budgeting, one thing is to find out where you can save, where you to identify where you are actually able to save, some unnecessary expenses, probably you can
Expenses,
cut
yeah,
those
yeah, yeah.
out. And then you can even identify what are your essentials, so you can get a baseline of how much you essentially need every month, in order for you to get through your month to month daily routines and all that. And the third thing that you can get from budgeting is, well, a good habit, and more money in the end of the day, because once you practice the
You're
first two
tracking it
steps,
lah.
right,
Well,
you are magically like getting 200-300 extra every month. And that's where you know money goes into investments and all. That's where we get started. So that's the first step, budgeting. And the second step that really works for me and works for pretty much anyone who do it, is simply uh, how do you say it? I lost my words there. Okay, no mind. Maybe Arvin, we can pass back the ball to you for now. Once
okay,
I
okay.
remember the next thing, I'll come back
Okay,
to
so
it.
basically, you're right
Mm.
to say that budgeting is huge, is important.
Mm-hmm.
But then we also need to know how much money that we are meant to spend. So even
Mm-hmm.
when we budget, we might still budget a little higher, a little lower, things like that.
Mm.
So essentially, what I always tell all my clients, or especially the younger ones, the older ones can manage their money already.
Yeah lah. Young
The
ones
younger
like us are
ones,
the
especially starting out, like
troublesomers.
Alvin and early 20s and stuff like that, you'd be surprised sometimes when I meet someone and they've been working for so long and then they don't have good savings. And I say, what do you do with your money? And then I break it down. I say, okay, how much do you pay for your rental? How much do you pay for this? How much do you pay for that? Actually, not much. Then you realize that the splurging is so much that it's actually scary. I'm not
Correct.
saying don't
Yep.
splurge, enjoy your life, but you got to spend it
Keep
within your
a
limit.
keep a fun lah. Maybe like a entertainment fund,
Yeah.
50
So
per month or what.
basically, the rule of thumb here is you don't spend more than 50% of your income on expenses. Now,
Mm.
and that's including your house rental and stuff like that. So if you're not paying rental, if you're staying with your mom and dad at this point of time, then that number shouldn't be 50%. It should be less. It should be maybe even 30 to 40% at this point of time. Because
Mm.
rental and house loans, they take on quite a lot. So let's just say an example, if you're earning 3,000, you shouldn't ideally be spending more than $1,500 a month,
Correct.
including rental. Okay. So now if you're not paying rental, then you shouldn't be spending more than 800, $1,000 a month. I don't think that is ideal. Okay. Because
Mm.
you can manage your whole lifestyle within that sum. You can pay off insurances, you can pay off your car, road tax, expenses. You can even pay off your monthly expenditure and stuff like that within 1,000. Very much. You still can have your Starbucks and stuff like that. Not a
Yep.
problem. Okay. So that's within 50%. Okay. So normally I tell people, like, if you can manage it within 40, great, because at least that 10% can go to some sort of charity. It's good to give back to the community. I'm a
Mm.
huge believer of that, because there's always somebody who needs it more than us. Okay. And so that's that. And then now, what do you do with the rest of your money? Okay, so 20% to 30%, you should now save it in a liquid fund. So normally when we say liquid fund, it can be either bonds, money market, or if you are Bumi Putra, you could go into like ASB, which is a good
Yep.
option. And for Indians, I know there's about $30,000 quota. So you can go and fill that up first. And then you can look at things like bonds and stuff like that. Okay. So what this does is you want to build at least a 12 months expenditure um, for your
Yep. Correct.
emergency fund. This is called a
Emergency
buffer
savings.
fund. So that's one thing you want to start doing first. So every income, let's say you have 3,000, you want to keep $600 away into ASNB account or ASB account or somewhere else, bonds or something like that.
Hmm?
Get it to about 12 months of your expenditure, which will mean, let's say if you're spending $1,000 a month, you should get to about $12,000 minimum. And that
Yep.
money should not be kept. So if you realize your expenditure is going higher, then you should increase that as well. So if you think like your expenditure is going to about $3,000 a month for whatever reason, then you should have a buffer of at least $24,000. That's a really good habit to have. And the rest of the money now, what happens to the other balance 30%? So that's why I tell people like the balance 30% is what you're going to have to invest to secure your financial
Mm.
future, to secure your wealth, to beat inflation, and to be financially free at some point of your life, you're going to have to at least move 30% of your income into investments. Now, I'm not saying unit
Yep.
trust. Okay, you can diversify. You can go unit trust, you can go real estate, you can go share market, you can go Bitcoin, go through the legal. What was the one that you were saying that day?
Luno, it's one of the
Ludo. You can go to,
three
go to
certified ones.
proper
Yeah.
moderated channels. Okay, don't go and do uh, quick money scheme and don't get into that entanglement lah.
Mm.
Financial it's a discipline. Building wealth is a discipline. Okay, I didn't mention FD there because FD is an absolute waste of time.
Yeah.
Come to us if you're even thinking of
Right.
fixed deposits.
Yep.
We will tell you what to do with your money.
Yep.
Okay.
Definitely.
Um,
All right, Arvin, I
so
remembered already. Now I've been
yeah,
writing things as we go.
so this is basically what I'm trying to say here.
Yep.
So this is how you distribute your funds. Nothing more than 50% of your income should be spent. Okay. Now, if you feel your expenses is beyond 50% of your income, you're going to have to start hustling. You're going to have to start thinking how you can either reduce your expenses or increase your income.
Yep.
One is saying
Either
you
one
cannot increase
or
your
both.
income. Okay. So one way of increasing your income is, of course, doing unit trust like how Dalvin is doing. I do it full time, so this is my full time income. But Dalvin is supplementing his full time income with a unit trust income so that he can either save more or he can spend more, and that's great because he's actually doing something
I'm definitely saving
productive.
more. I'll say that
So he's
definitely
actually doing
saving more. Yeah.
something productive to move towards his financial freedom. So that's essentially that's what we want. We want to not work like crazy people every single day. Or even if we enjoy working, it's supposed to be a choice, lah. It's not supposed to
Mm.
be a task. Okay, so we want to
Right.
get to that point. That's important. And to do that, you must have at least spending only 50% maximum of your expenses, investing 30,
Mm.
the other 20, putting it into a liquid fund where you can access in terms of emergency. So that's
Right.
basically great financial habits. Lah.
All right. So
Yeah.
to expand a bit on that, say since when starting to work again,
Uh,
okay. So I should have written this beforehand, but lah,
yeah,
malam
that's
hari
okay.
and things don't go as planned as always. Okay.
Correct. We were having connection
So
issues as well before, so
yep. So those kind of things always happen. So yeah, the next tip, this is something that all of us can apply, regardless if we are students, we are working, or we are retired and whatnot, right? So one good way to save your expenses, or save the money that is going out of your pocket, is having, well, go hunt for discounts, hunt for sales, and go for bargain hunting basically, and also sharing costs. That's another good way. For example,
mm,
say a very good way for students to share costs is by renting a room and sharing between two or three students, and that's normally very very common. Even during my days, I've seen like a master room which only usually fits like two, like two queen beds, for example. There'll be like four or five people in one room, and it's the room is still pretty wide. You just take an extra
yeah.
mattress,
You do whatever you
lay
need
down,
to
and you
reduce
share.
your expenses like at the end of the day.
Correct.
Yeah. We're not telling
That's
you to be a
one.
cheapskate. We're not saying
Mm.
be being a cheapskate at all. We're trying to say is spend within your means. If you earn more, you spend more, fine. But if
Mm.
you are not earning that much and your lifestyle is beyond your means, you are a ticking time bomb. Lah. That's what I'm trying to
Correct.
say. Yeah.
Correct. And then Arvin, the third one that actually it's also I'd say as our lifestyle grows, right, our income grows, this will be very relevant. Which is to, you know, when our income increases, our expenses should not
Should
inflate
not
that
increase. Yeah.
much. Correct. Say for example, very simple example, my current life, for example, I'm earning 3K, my expenses are 1,500 per month, and then the rest 1,500 are either saved and invested and whatnot. So it's like a 50-50, 50 income, 50 expenses, 50 savings.
Yeah.
But what happens if the income grows to 4,000? Now, let's say, someone gets a promotion
Yeah.
and
Yeah.
whatnot. So 4,000, does it mean you're going to
Your
spend the extra
expenses income.
1,000
Try
every
not to do
month?
that. Lah.
No,
Yeah.
right? Mm. So
Yeah.
this is where a lot of people fall short as well. Like I think earlier in the
One thing
at the
I'll say,
starting you
right?
mentioned, right?
One thing I'll say to
Mm.
this to add on, someone many years ago when I was in my 20s told me, he
Mm-hmm.
said, look, always control your expenses because the moment your expenses increase, it's very, very hard to bring it down. You
Mm.
will be accustomed to a certain lifestyle that you won't be able to bring it down easily. No matter
Correct.
what you do, it's going to be hard. So, of course, it's not impossible. Why even start getting to a difficult spot? So
Correct. Yep.
maintain your
Yep.
expenses low. Even like if you're earning income higher, great, but don't jump that gun lah. Because if your expenses are high, it's really hard to bring it down.
Definitely. Yeah, that's the thing, because once with your income increase, you also increase your lifestyle. So what happens if your main source of income is gone, and
Yep.
or your
That's where your
major source of
emergency
income is
funds
gone?
needs to be there lah.
Yep, correct. And we are trying not to rely on an emergency fund first of all. But let's
Correct.
say you deplete all of that as well, and how else are you going to fund
How
your
else you
life?
gonna survive? Credit card
Yeah,
lah.
so you have
Huh?
to you have to start selling the things that you need in order for you to survive.
Yeah,
If
yeah,
you are, I think that this is also a very very good quote by someone somewhere. So if
yeah.
you now if you buy things that you don't need, you know later on in life, you may
You might
have to
have to
sell the
sell, yeah,
things that you need in order to
to
survive.
survive. Yeah, yeah,
So things like, if you, I mean, okay, I have a Myvi. I'm happy with that. I can probably drive her for the next 5-6 years, and
mm,
I'm still single, so there's no problem with that. But what if, like my pay gets double in the next month or so, for example, like magically out of nowhere? Just assume that, am I going to straight away like get like a Merc or like a Ferrari that I always wanted? No,
yeah.
because with that lifestyle increase, then it's also going to cost me down the road if, let's say, I don't have a job anymore, or let's say,
You're gonna have to sell your car, lah.
yeah, that's the thing. So I will have to sell the car. Now I don't have anything to travel with, so it's like a burden on me. That's one. And then the
Yeah,
last thing, it's I'd say not so not so important, but I'd say it's a good habit to practice if you would like to collect some money to spend for certain reasons. For example, you want to travel, or in my example, I want to build like a gaming PC rig, you know, and maybe some other people, they have interest in cars. So like I know a few of my clients as well. They are very, uh, let's say,
enthusiast,
petrol
lah.
heads lah. So all of us have different interests in life. So what we can do is very simple. Create an entertainment fund. Very simple. That means, instead of
Allocate, lah.
correct, instead of spending like 300-400 every month unnecessarily, perhaps you can allocate like 100 monthly into that fund, and then spend as you need. Now, for example, let's say, a car person, he would like to, like, hey, put some stickers, custom stickers and whatnot. Okay, so I've saved up 600 in 6 months. That thing is going to cost me 300, and hey, I have 300 in my entertainment fund. That's basically free funding. So that's a good way to fund your lifestyle, or not really lifestyle. I'd say to fund your hobbies lah. Mm,
And you need to have
correct.
fun, man. What are you earning money for if you're not having fun? But all
Definitely.
within the allocations.
Yep.
Yeah, that's good.
Mm,
That's a good advice. All right,
yep.
so
So
let's
that's
move
it
on
from me, Arvin.
to
Yeah.
yeah, let's move
Now,
on to the
ball to you
second
again.
part where what constitutes a good investor. So now, great that you have now created good habits and you've kept away money for investment. So, what constitutes a good um, investor? This is important for me, like especially me, because I always tell my clients upfront, this is what I need you to do for me. And if you're
Mm-hmm.
not willing to do this for me, it's going to be very hard for me to work with you because because discipline is key, paramount in anything that you want to be, anything in life that you want it to lead to success. So even in investment, if you're not a disciplined investor, you become a speculator, you become a gambler. Then this is not the place. I'm not the person for me. I'm not the person to advise you for these things.
Mm,
So if
yep.
you want to gamble and if you want to speculate, go
Bukan
somewhere
thing
else
lah.
because not here. Because I won't be
Mm,
willing to take your account.
correct.
Okay.
Yep.
So the couple of things that we very we emphasize very strongly upon among our agency people is the first thing first. This is unit trust industry as a whole. Lah. Now, if you're not willing to think long term, then you are in the absolute wrong place. Okay, so when I say long term, is at least 5 to 7 years. Then some people come to me, hey, 1 year, 2 years, can la. I say cannot. It's not possible. Like if
Mm,
I'm greedy for commission, I'll take it. But it's just not possible. Then I tell them, how much you're willing to invest. If those people are 2 to 3 years people, how much you're willing to invest? Or I'll give
yep.
you 30,000. And then I say, look, I don't want 30,000. If you're going to take a very risky move, just give me 15. The other 15, keep it somewhere else because you might need it. And when you need it, I don't want you to be coming to look at me. I might make it happen. It depends on the market condition, but it
Yep.
might not work.
Mm,
Okay, so just give me 10 or 15, half of what you're willing to give me. And that is for those people. And I've done one or two, but very uncomfortable. Okay. So I tell them upfront, I don't want you to give me all this money because it's just way too much
yep. Yep. Definitely. Mm,
to do in a short term. So short term dangerous, super dangerous. And then especially now with people who have seen massive profits. Okay. So I will say like one cycle is done already because
mm,
markets getting
yep.
correction, okay, markets getting corrected and stuff like that. So in this last 2 to 3 years, we started at the bottom. Now we're at the high. We've already made a circle of money. Now this is round two. So you have to start from the starting block again. What happens from now onwards, we don't know. You need to give it at least 3 to 5 years to find out.
Correct. Yep.
Okay. So my clients who have made money, they have made money. You cannot expect to be in the same shoes as those people because they have done things differently. Their timing have been different. So rule number one, long term, 5 to 7 years, no compromise. So that is always
Mm,
what I tell. That's really good trade of a decent investor. So now
correct.
that's
In
important
unit
without rule
trust,
number one.
especially, right?
Yeah, with
Mm,
unit trust
that's yeah.
especially. We're talking
Mm,
it in our context. Lah. So number two, it'd be great to maintain liquidity. Okay, now when
mm-hmm.
you say liquidity, because what happens is markets are always volatile. So we
Yep.
want to have enough money to go in different times. So how do you maintain liquidity? Is one, you can start off with a regular saving plan. So when you do a regular saving plan, there's always money coming in into the fund. It can be
Mm,
small, it doesn't matter. Okay, so even 500, 600, $700, we go in into different funds. Well, no matter where the market is, just make sure that money is going in.
yep. Definitely.
Okay, on you don't miss any of the timelines lah. Then if you do that, it's very hard to get it wrong in a long period of time. Now the third thing
Mm,
is okay, so the second part of the liquidity part is now if you have asset size, if you say you don't want to do monthly, you want to do lump sum, great. So if you don't have an asset size of 100,000, 100,000 is great because your fund becomes liquid. We can move it within
mm,
those funds
yep.
very easily because
Free
we get
switching.
free switching. That's a
Mm,
benefit of the gold account. So, but now let's say if we go like, hey, no, I cannot afford 100,000. I can give you 30,000 or 50,000. What we do is then we break your funds up. We don't expose everything into equity at one go. We break it into money market and then we auto
mm,
average it for you.
correct.
There's
Yep.
always second. rule is liquidity. Success of a fund, first long term, second part managing the liquidity of the fund. Now, third part is where I feel is the most crucial. And if investors can really do this, capitalize on it, the success rate is quite high. Asset averaging. So what does this mean
Ah,
is when markets fall, markets drop, let's say 10%, 12%, 15% from like a normal value. Normally my trigger point is 15, like because like drop 7, 8%, it'll just bounce back in the next
yeah,
month
that's
or
the thing. It'll just recover
normal
immediately
lah.
the next day. Yep.
Uh, but let's say if it hits 15%, that's when I start getting excited and I go like, hey guys, time to buy, time to buy, time to buy. And those who have done it, like a lot of times, even recently I did it. About 2 months ago,
Yep.
we did
2 weeks,
REITs 500
2 months,
ringgit.
2 weeks ago
We
also.
did
Yep.
Indonesia, and that was like done. And then I did another round of calling
Yep.
500 ringgit of REITs. And within 2 months, they didn't make huge money, but like we made about 2-3% in in about 2 months.
2 months,
So
yeah.
those
Two
who
months.
put it at
Correct.
that time, they're good. They made 2%, and we don't know what's going to happen in the next 3 months because those was like at the really low numbers of the REITs, and REITs are probably just going to slowly, not fast, but very slowly grow. But that's great because they are averaging at the bottom.
Yep, definitely. Yeah.
So that will
Basically you're buying buying everything on discount lah. So
everything
waiting
on
for it to
discount.
go back up to the normal price.
Yeah. And then people come to me and they say, hey, dangerous lah. What if the fund keeps tumbling down? And this is where you don't understand unit trust. This is where people who do share market don't understand
Mm.
what unit trust is. Unit trust has a bottom. If you look historically, there's always a bottom. Why there is a bottom? Because we don't buy one fund like share market. We
Correct.
buy a pool of funds. Now, the only way the
It's
fund
already
will
automatically
collapse,
diversified lah. Yeah.
yes, only way the funds will collapse if the country goes bankrupt. And when is
Yep.
the last you heard? We're not Venezuela. We don't invest in countries like that. We invest in countries like China, like India, like US, like Malaysia. We invest in real estate. We invest in commodities. Things like this are the chances of it collapsing is like pretty much none, really.
Yep.
Okay. So even if let's say one collapse, you still got the other five funds to, unless the
Correct.
world collapse
I think there's
that's a
a
different
higher chance
story.
of lightning striking twice in a place than a country collapsing lah.
Yeah, so that's the odds lah. That's really the
Mm.
odds. So there's always a bottom. And the worst I've personally seen a fund hit bottom is 30% is normal. I saw Indonesia fund hit minus 45 during COVID-19. And
Yeah,
that
that
was
was
like the
the
biggest.
start of
But
it.
then those who bought at that time, oh my God, the amount of money they're making right now, they've made like I think the fund has recovered and is already making profit from
About
that point of time.
30,
So
40%
you'll be
like that.
making
Mm.
45% margin in less than a year.
Mm.
And even if it drops to 5 and you bought at 45, it doesn't matter. You're still making like what another you're still making 45. You're still making 30. So that's big numbers, guys. So averaging in unit trust is safe. It's just got to be done at the right time.
Yep, definitely.
You
Yep,
cannot really go
correct,
wrong.
correct.
Lah. Now Now, in terms of course, then all of the other factors come in, fund selection, history of funds. Those are all been covered in different videos. But in terms
Mm.
of discipline of investor, this is what we want to do. Now, I'm not saying Indonesia is a good fund. Indonesia is actually not one of the best funds that we have, but the fact that we can average and make money on it, the fact that we can do such things in very volatile market, that means averaging works.
Yep.
And the other thing is with REITs is probably not going to recover as what we thought is going to be this year. But there was a point this year where it dropped below its last 1 year average.
Mm.
And when it happened, like we bought and it recovered. And it still got a good space to recover. Maybe by next year, maybe 2022 and mid, we are laughing when REITs recover. Because there will be a
Waiting
point
for
that
that lah.
equity will
Mm.
come down and REITs will go up and it will hit that line again.
Yeah, the crossover lah. Mm.
It will happen. But we don't know when lah. So we cannot
Right.
keep everything in equity because equity, like I said, is correcting already. How much more will it correct? We don't know. Will it bounce back fast enough? We don't know anything. But as long as we know is we follow a discipline, we'll be all right.
Mm-hmm.
So yeah, that's basically it. Anything to add on in terms of habits and traits of
Mm.
what's required of a successful investor?
Yeah. You mentioned diversification, right? Like I mean, it's sort of we kind of mentioned it like unit trust itself, as you know, like an equity fund itself is pretty diversified. For example, like a Malaysian fund is, you know, not just one stock. We are buying multiple stocks, so
Yes,
it's
yes, correct.
in a
And
sense
different
it's pretty
industries as well,
diversified.
not just one industry.
Correct. So I like to add on to that definitely. You know, apart from unit trust, right? Like this is an encouragement lah to others out there, right? If you are only investing in unit trust or you're only investing in other products, for example, you're only into real estates, you're only into stocks, you're only into bonds, and nowadays you know, some people are gung ho 100% into cryptos. So you know, it's as an investor lah, you should have the mindset that you should diversify your investments. Don't put everything in one, you know, one place. Don't put all your eggs in one basket. Why? Very simple reason. Say you know, gold collapses one day and all your money that you store in gold, that's it, you're going to lose your value. Say all the stocks in the world, you know, suddenly have a big correction and you happen to need the money at that time, what's going to happen? You lose about 30-40% of your value.
And yeah,
That's the
and from
thing.
all the things that you said just now, gold and crypto and stock market and real estate, I would definitely say the unit trust is the lowest risk among all of these things, and at the same time the least headache.
Yeah,
Yeah,
definitely.
there's some
Yeah.
definitely there lah.
Correct. And also a very good piece of advice I received from good people around. So and also just from YouTube lah. No need to go far also. Whenever you are entering a new market space or new investment, right? Sometimes we get enticed by the money that we can potentially make. Example, when let's say pandemic started, gloves started to shoot up.
Yeah,
There
yeah,
were
yeah.
some people who really made money, life changing amount of money just by gambling all their life saving into one stock, in the hopes that that will go up. It
That's
did
gambling
and
lah.
made money. But what's going to happen if they keep with that mentality? Let's say, okay lah,
What if
one
you
time
get it wrong?
jadi. Correct. If they get it wrong, that's it. What if they get it right and then they, carry on with the idea that, hey, I maybe, I'm good with guessing, and they try that again and probably whatever they've made, they're going to lose it. So
Yeah.
it is a very dangerous
I
thing to
remember
do also.
telling one of my clients, I think somewhere last year, maybe 8 months ago, she sat
Mhm.
with me and she didn't sign up unit trust, but she came and said, "Hey, what about gold? I heard gold is very high and it's flying." And this is 8 months ago, and this is what I told her. And I'm so glad I told her that, because otherwise she'll be laughing, she'll be crying right now. Because she said, "Hey, gold prices are flying. La. Shall I invest in gold? La?" This is a typical herd mentality, where when something is
Correct.
doing so well that we go and jump on it. And what happens is when the thing becomes overpriced, there's no value in it and it just zoop crashes
That's
down.
to drop. Correct.
Every
And also,
single time this
yeah,
happens, every single time people fall into the same trap. And that's why
correct.
asset
The hype lah.
averaging is what is important. We buy stuff that is not hyped up. We buy stuff that people don't see at the moment. People are
Mm.
ignorant. So among our agency, especially within the Greater China Fund, we have stopped investing massive amounts of money there. Why? Because it
Yep.
is so expensive, and we were right to do so because it has kind of did a correction. It was 15% in January or February. Now it's like back, it's just 7-8%. It did a 7 or 8% drop. Now,
Yep.
will it go back to 16? I think so. But then if I had bought at 16 and it goes back to 16, what happens? Nothing.
Yep. That's where the drop comes in. We average it lah. We buy
Nothing
cheaper.
happens. It's a waste of time.
Yeah.
It's a absolutely
Mm.
waste of time. Your money does nothing. So I do think like it will go back to about 15, 16 by the end of the year. But what's the point of buying it at 15 and then go back at 15 and you have done nothing? So you might as well find something that is low and in anticipation that it
Mm.
might go up by 15 in maybe 2 years, and you make 7% a year. It's a better
Correct.
activity, right? It makes a smarter thing to do.
Yep.
So yeah, when we pick stocks, we pick funds, we have to think 2 years from today, not right now. Because right now people have made money already. The correction has to happen, because if it doesn't happen, then it's not unit trust or it's not the market. It's
Yeah.
so don't go and buy stuff like mental on top there. You're gonna find stuff a little bit lower. You could balance it with some potential, things like that.
Yep. And I confidently can say this lah because I am like putting my hands into other investments as well apart from our unit trust, right, which is pretty much like 80% of where my investments are, and then the rest 20% are into other things that I want to explore, like stocks and crypto market. These are the ones that I'm actually exploring. So it's not to say a bad thing to have things that are higher risk, but go very carefully into
Yeah.
things that are very speculative and very high risk. So the very general rule of thumb is nothing more than 10% of your net worth or your income or your savings into something that you are
It's
starting
in
to
the high
invest.
risk bracket lah.
Correct. So I'm sticking to that rule lah. So to put
Everything
it
you want to
simple,
do have
per
ratios
year
lah. Yeah,
1,000, per year 1,000, no more than that for stocks
high
and
risk stuff. Yeah.
cryptocurrencies and
You're
all.
right to
So
say that
other than
again.
that,
Like
no
you
more.
just allocate 10% for high risk investment, and that is
Mm,
exactly back to the ratio aspect that we were talking at the start. Where we were saying that everything that we have needs to be spent within the ratio.
correct.
So even within investment, let's say I'm putting 30% away. I'm not expecting you to put all 30% into unit trust. Now that
Mm,
might not, I mean, you can. I do it. I spend a lot of because I'm building, I just want to build a good, strong portfolio for my retirement for within unit trust first before exploring into other stuff. Uh, but the other stuff is just too risky for me, and I'm quite good at unit trust, right? So I can kind of make
yep.
those numbers on unit trust. I don't have to go to very speculative places because we trade every day lah, so it's slightly
Yeah
different
lah.
than to normal people. So I don't expect the public out there to do what I'm doing. But I can help you to do, but I won't be able to do it at my level lah, because I can just buy whenever I feel like it, and you might not be able to. Okay, so back to what I'm saying is now from that 30% of ratio that you want to invest, you
Mm,
can take maybe 10%. So let's just say 30% of 3,000 is 900 ringgit. You
mm,
could go, okay, 20% of or 10% or 20% of that 900, which comes to about 200 ringgit, like give and take, you can invest into high risk items, which
right.
and then the other 500, 400, you invest in maybe unit trust. Or then if you say, maybe I want to keep some away for property, or I don't know, just whatever you feel lah, so
Yep.
you
Yep.
split your investment part into medium and high risk as well.
Correct. Again,
And
it
then
comes to
the initial
budgeting also
20%,
lah.
you keep in low risk stuff.
Mm.
Yeah, so that's basically it lah.
And don't follow the trend. Like don't follow. I mean, following trend is okay, but don't follow the hype lah.
I
There's
think the
always
goal
a
video is
trend.
the next what we're going to do.
Okay. So what I mean by trend and hypes, right? There's always like trend in the markets. Like for example, like we see the trend currently, stock markets are in a bad shape, sort of. They're correcting and all. So people are very cautious when they want to enter the stock market now. Like they're weighing their options whether this company is it worth investing, that company is it worth investing. So that's the trend. What about hype? Hype is very simple term. Maybe we can take Tesla. Like people say, oh, Tesla is going to be the future, electric vehicles and all, and suddenly Elon Musk, puts out one damn tweet and that's it.
Yeah, everything fly.
Everything
I'll
goes
tell
to the
you what the
sky.
real hype is. Okay, I'll tell you what the real hype is. Do you remember the COVID-19 April, May, right? So glove markets were like flying high. Okay, so that's good. That's
Yeah.
good because they were meant to fly high. But then there was another company, I can't remember its name now. They were not doing medical gloves. They were doing, like the purple gloves. There is nothing to do with
All the
healthcare, nothing to do
industrial
with
gloves.
medical, and
Uh,
those funds were flying as well.
yeah.
So
So
that
like
is hype. There's
how?
just somebody say, hey,
That's the
glove,
thing.
a glove, but they're not looking into what glove is it,
Mm,
so that is hype. I mean, sometimes some people benefit of hype lah. So
mm.
don't go and do stuff like that lah, because be a little bit more informed and do the right things. Like example is the gold lah. Gold is a real example because right now it's crashed. But if you want to buy it right now, it's a smart thing to do lah. I don't know how much further it will crash, but
unless
it might come back
unless you're
upwards or
averaging,
something.
then it's okay lah.
Then it's
Then
okay.
it's a
Yeah, yeah,
different
yeah.
thing. If you're
Long
buying
term,
now
even
just
if you look
because
at gold, you're
someone
looking at
said,
long term. Sell it
correct.
when it's high, buy it when it's low. Simple
Mm.
rules lah.
Yep. So that's it pretty much from me, Arvin.
Yeah,
I
same
think
for
we can
me. I'm pretty much
wrap it
done
up.
as well. Yeah,
Yeah.
so I hope you've enjoyed this. And if you do have any questions, feel free to reach out to any one of us.
Yeah.
More than happy
Also,
to help you.
share your tips, in the comments. I'm pretty sure
Yeah, yeah.
everyone has
If
like their
you
own
feel
funny way or weird way or a good way maybe to approach their financials and investments. So do let us know. Perhaps
Yeah.
we can give you a shout out in the next videos and share that as well. So yeah.
Yeah. And just wanted to share in terms of recruitment, man. Do you know, Darwin, you probably don't know this, but do you know our
Mhm.
agency recruited the most people within Manulife this year?
Ah, really?
Yeah, so we did 5 recruitments,
Oh,
and that's like
okay.
I just found out in today's agency meeting that we are like ranked number one lah at the moment
I see. Nice.
in terms of
This year,
recruitment lah.
is it?
So
I
far lah,
see.
so far up to now.
Hmm.
So let's try
Okay.
to make
Okay.
sure we are like there till the
Five,
end of the
right?
year. So
Five,
five,
is it?
I don't know how
Five.
it came about,
I see.
but we have
Make it.
9 people with us lah now.
Hmm.
So
Yeah, I
so it
joined
must have
last
been
year,
a couple
so
from last year and a couple from this year.
yep, yep.
It seems like it's more, but yeah, never mind.
Yeah, we'll get one more soon. Very, very soon.
That's nice. That's nice.
Hmm.
And yeah, so that's cool. And if you're watching there, like if you want to increase your income gap as well, come and join us. We are really looking to grow our team. All of us are super energetic, and all of us are very excited. And we have Zoom. Zoom is a blessing. You don't have to like waste time coming and meeting and stuff like that. Everything can be done in last
Mhm.
short periods of time via online as well. So we look forward to having you guys on board as well. And
Yep.
if you do want to consider jump on our agency meeting, I think first April is the next one. And
First April, huh?
yeah,
It's
we're
not
going
gonna
to
be
lock that in.
a April Fool joke or what?
Maybe we'll just have a April Fool thing lah.
Hmm. I see. I see.
And yeah, that's
Can lah,
basically it,
can
guys.
lah. Good idea.
And
Maybe we can do something for April Fool.
yeah, we'll figure something out. And yes, that's that. And we'll see you guys soon then.
All right. Thank you, everybody.
All
So
right.
take
Good
care.
night.
All right. Bye bye.